Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Monday, April 18th. It is 5:51 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin down 2.5%. Coming into support there. So if you're a Bitcoiner, stay on your toes. Oil down about 0.5%. Gold and silver up nicely, 1.2%. Copper up 1%. And nat gas continues its epic run, up 3%. Little thin on the macro front today. Not a lot of, not any data releases really. And Bullard is talking at 4 p.m., but that's after the close. On the earnings front, Bank of America this morning, along with Schwab and a couple of other names. After the bell, a lot of regional banks plus JB Hunt, which I'm going to be watching for trucking to get a read on that. We've seen a lot of chatter, and we saw a big rug pull in the sector as reports of freight rates falling through the floor. So I want to listen to JB Hunt pretty carefully. On the blog this morning, I put some meat on the bone as far as the macro backdrop that we're going to be facing here really for the foreseeable future surrounding shrinking liquidity, persistent inflation, and commodity supercycle. Now, if you're new to the channel and didn't get my email over the weekend, I've put a link in there to a 60-minute podcast by Jeff Curry, head of commodities at Goldman. He did a really nice job summarizing the commodity picture and outlook, and so I think it's worth a listen if you don't really feel like you're up to speed in the commodity sector. Also, earnings season brings bracket trades to the forefront, and I explain those a little bit in the blog site this morning. Plus, I provide a link to a video I did a couple years ago explaining what they are. But essentially, you'll get a lot of earnings driven gaps, either higher or lower, and then those set up really well for second day plays. So anyways, those are on the blog site this morning, along with 4 or 5 trades about to happen, setups that I see that I'll be watching today and the days to come for possible entry. So worthwhile visiting the blog site this morning. Okay, let's dive into the charts here. Starting out as we usually do with our oscillators, we were traveling down. We had the little kickback fake rally on Wednesday coming out of the CPI print, where everybody was thinking, and I was too, thinking, could it be 9 or 10%? Came in mostly in line, 8.5%, and that caused a relief rally. But then on Thursday, they ran it right back down, so that proved to be a fake move. So we're right here in the middle of the range. Really, nothing consequential as far as giving us a signal. We're gonna have to wait till it comes down, but I think there is a lot of room to move lower before things get stretched to the downside, and we'd be looking to cover shorts at that point, but I don't see it yet. If I were to go over to the NASDAQ oscillator, which I'm going to skip, you'd see exactly the same thing, posture right around the midpoint of the range. SPY put in this little bull sandwich candle structure. You see the red bar here, then you got a bullish bar in the middle, and then a big red bar after it, calling that a bull sandwich, which ironically is a bearish structure because it more or less said that the bar in the middle was fake. As far as your technicals go today, I think it's real simple, especially for you swing traders that want to stay in positions, more than just a few days. We got price sandwiched in between the 50 up here in green and the 200, which comes in at 437.50. So since we're down about 0.5% here this morning, we're still 3.5 hours before the open, but assuming that holds and we move down below the 200, that's more or less a green light to be short, or at least be very cautious of your longs, because once you get below the 200, then you're by definition on the wrong side of the chart. So I think on the daily time frame, you definitely need to be watching the 200, and you can see here on the 2-hour chart, they rallied it up into this intermediate downtrend line, and then it just like rolled over right away, and we're right back down to the what would it be, the Tuesday lows. Tuesday, Wednesday, Thursday, back down. So I think you can use this 438 as your pivot this morning, with a decent support level coming in here around 434, but then big void in the chart, and your next big volume over price bar doesn't come in till 426. So kind of a bearish type setup. And here on the 30-minute chart, you just got some tighter resolution on basically the same levels. But don't forget to keep an eye on your indicators. Notice here on Thursday, before we went on the nice 3-day break, and by the way, I hope you guys had a nice holiday with your family. I did. Had a nice dinner yesterday with mom and dad. That was nice. But notice here, a rally up to the 0 line, bearish cross, keeps everything bearish. Is going to roll over, staying in the bearish regime. And notice RSI cannot really break above 50. So this has been persistently bearish for a while, as has momentum. So those being supportive of lower prices. Notice while the candle structure looks similar to SPY, actually the Qs are in a lot worse shape. Why? Well, we just reinitiated the full bearish stack on the EMAs. We got the 200 on top, then the 50, then the 20, then the 8, and price below all of them. So a very bearish type setup on the Qs, where rising interest rates are going to affect tech a lot more than other industrial sectors. So there's been a lot of selling pressure on QQQ. And I think here, notice we're right at the bottom of this big value area down here at 340, 339, wherever you want to draw that line, we're right there. And I think if we decisively break below, I think we're going to come down and test these lows again down at 320. That doesn't have to be, in a straight line this week or anything like that. All I'm saying is price is definitely on the wrong side of the chart. It's definitely bearish. Full bearish stack on EMAs. Those are going to act as resistance on the way back up. We've got RSI moving back below 50. We've got momentum nosediving with our PPO histogram below 0. So these are diving, and there's just more or less a good sized void in the chart over here. I don't think there's going to be a whole lot of support or willingness of buyers to step in until we get sufficiently oversold on those oscillators, and then we should be looking to back out of our shorts. But I think now the path of least resistance is lower. Here we've got on the 2-hour chart, same thing, just different, more of a zoom in. You've got the large volume over price bar here, and really anything below 339, then you get into this lighter trading area, and you can see very clearly where these prior lows were back at 318 and 322. So those would be natural targets on the downside should we get down in that area. And then here on the 30-minute chart, if you're an active trader, you can zoom down to these levels and pick off some intermediate support and resistance zones. And don't forget, if we open lower in the morning, don't forget that'll leave a gap above that will eventually need to get filled. So mark your gaps after the cash open, and if they try to flash it and go higher, then you'll know exactly where that level is and where Thursday's close was. So that'll give you the gap, and then once that's filled, you need to obviously watch for price to roll over. IWM, still bearish, full bearish stack on the EMAs. We are right in the middle of this trading range between 206 and 187.50. Really needs to hold in here at 196. If it loses 196, I think it most definitely comes down to the bottom of the box, and then that'll be a very big location on the chart, because if you break these lows, then we go down further, and probably substantially down. I think on the weekly chart, those targets are down around 170. So we're probably going to be coming into a big decision point here on IWM. Got a downtrend line for you here. We came down, rallied up to the trend line, then rolled over. I think if we look at the 30-minute chart, you can pick off your pivot point right here at 199, with first support coming down around 197. I think those levels are going to work really, really well for you. On the upside, if you can take out 201, where reject, 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 reject. If you come up to 201 and you can break out there, I think you can try along there and see if you can't come up, fill that gap up to 203. That would be a decent trade if things get bullish. But as it stands now, I think you got to be leaning to the downside. Before we get into Fatman, I want to welcome any new visitors to the channel. I really appreciate you spending some time with me this morning. I work hard to give you solid levels, setups, and commentary on how I think these charts should be traded. If you appreciate that, hit the subscribe button and the alarm bell and the thumbs up. I would really appreciate that. And then if you want to go the extra mile and get the most out of my work, go over to the show notes and find the link to the blog page where you can drop in your email and register for all my content. That way, morning, noon, or night, whenever I send out a market observation or trade idea, anything at all, it'll wind up in your email box. You won't have to go hunting for it. And I'll also be able to send you an invite to our trading room. And I think you'd get some benefit by joining us in there. So thank you again. And I hope you get a lot out of these videos. Anyhow, on Facebook, just grinding its way lower down here around 209. I think you got to have a pivot point here just above 208. If it can hold that, possibly get a bounce. But if not, I think you're going to be coming down here to 204 and back into 198 again. So notice PPO bearish, RSI bearish as well. Apple, even if you're not going to trade it, is a very important one to watch. Sentiment wise, I mean, it's in the Dow, it's in the Qs, it's in SPY, biggest market cap company. If they start taking this one down and really aggressively going after it, that is going to say volumes about where the market is and where it may be heading. So keep a close eye on Apple. I think today this 165 is a simple pivot. If it stays above, you could see a rally back into 168.50, possibly even to 170. But while below, I think you're going to come down in here to 163, 162 support zone. Let's take a look at the daily chart. You can see went through this little void here, and you can see that a bigger support zone is just below between 161 and 157 where the 200 comes in. So my thinking right now is price is at least going to come back to the 200 for a check, for a test, and then we'll see what happens after that. Tesla is another important one, I think, for sentiment, even if you're not going to trade it. I think it's a good measure of risk on, risk off, and the chart is still remarkably pretty constructive. You see price consolidating here above the 50. So I think for today, you got two important lines to watch. One, 1,000 on the upside to see if price can break above and then head back up towards 1050, 1100, or if it loses the 50 at 969, then I think you're going to come down in here to between 930 and 900, I would think is the next level. And then notice you've got the 200 there right below at, let's call it 889. So I think those are going to be really important levels for Tesla in the coming days. Microsoft, bad day at the office on Thursday, down over 3.5%, but very much like the Tesla setup, or excuse me, what am I doing? Down 2.71. Sorry, I didn't click it over. Microsoft. Anyhow, bearish look. We lost this little value area on Thursday below 282. Now we've got a $2 gap coming, 278 to 276, and then below that, testing these prior lows. What would give me caution on the downside? Well, first off, a break above this downtrend line. So for instance, if we came down here to the top of the gap and then got a big bounce back up above 282, then whenever you recapture a level from below, a well-defined level from below, if you got a break back above 282, I think you can take it long, because I think it would favor a move back up to 288. Let's look at the daily real quick. Yeah, see how close we are to these prior lows, which was down at 272.50. I mean, I personally think it's going to head down there for a test. I mean, we're not that far away, just really $8 or so. So I would be prepared for that, and you'd almost anticipate a bounce there at these lows. So be ready for that. Amazon down 2.5% on Thursday. I think you got an easy pivot here at 30.25. You can be long above, short below, and then you got this prior low of the other day down here at 29.90, let's call it. So you break that low, then I think you're coming down to this 29.10 area down here at this large volume over price bar. And notice in here, between 30.25 and 29.50, there's a big void in the chart, and I think you might find that price moves pretty quickly to that area down into this 29.50 zone. Google, I mean, we're already there, right? All these prior lows back in January, February, March, we're right back down at these lows. I think you don't do anything with this until price gets down to this 25.20 area, and then see if it holds or if it breaks. I think this would be a major violation if if price went down through that like a warm knife through butter. If it just keeps going, doesn't even hesitate at all, that'll speak to how motivated the sellers are. So you'd expect a bounce here, but if you don't get it, then I think you come down at least another $100 lower into this 24.25 area. Netflix, same kind of idea. We're right back at these lows at 30.30. I would have yourself an alarm there, and if you're interested in trading it, that's where I would be interested in either a bounce or a failure. Now, I want you to notice something I just saw while I was looking at this. We got the makings of 2/3 of a double bottom. We got the left side of the W, and then we've got for the first low, and then we're coming in for the double bottom low. And notice the bullish divergence. We've got a rising PPO here and a rising RSI. So if this thing comes down to 330 and holds, you'd have that double bottom setup with bullish divergence, and then what you could see is the right side of the W start forming, and I think that would be a pretty cool place to try a long if you see that 330 holds. And actually, it's a very low risk trade, right? If you get right down in there to 330, and you could put a long on there with, say, a $5 stop, that's a nice risk reward trade, because even if it just goes back up to here, that's $70 higher. So you're risking 5 or 10 to make 70. that would be a nice trade. And then with any luck, notice that the measured move on that from bottom of the double bottom at 330 to the top, call it 400, so that's $70. $70 on the 400 gives you a measured move up into the 470s. So that would be pretty interesting. Semiconductors, bad day at the office, 3%, losing this consolidation flag, going down and testing this prior low from back in February, I guess. No, actually March, right here. So below 240. I mean, we're so close right here. I probably wouldn't do anything with it unless you thought that was just going to break. You've got a low right here at about 238, and you've got a decent sized volume over price bar here. I would probably wait to see what happens and then see if it breaks below 235. Below 235, I think you're coming down to 223 rather quickly. But semiconductors are another one that are really good for gauging risk on, risk off backdrop. And as you can see, I mean, we went from 280 to 240 in a flash, really in a straight line. I mean, the green days were nothing. And you can see the big red bars and gaps down and all that kind of stuff. So pretty bearish look. So I want to go through ARC real quick just to tell you what I'm thinking. I mean, if you go through the notes and if you've been with me for any amount of time, I think this is about as hard as it gets for the ARC complex, which is comprised of tons of unprofitable companies. Tons, if they do make a profit, the PE is sky high, like in the thousands. I just think they're heading lower. I'll just say it that way, and I'll tell you what positions I'm in right now as I go through these. Anyhow, oversold kickback rally to the 50 where it failed. We got a gap here between like 25 down to 24. I am in the June 27 puts that I got back up here. I think I let you guys know about that. So I'm looking for lower prices, and I'm looking for at least a run at the prior low down at 23. ARC Genomics, I'm not in this one. No particular reason why. But just looking at the chart, it's like all the other ones. I think we're heading lower, and I think we're going to find our way back to 38 sooner rather than later. I think one of the issues with this ARC-G was the spreads on the options were kind of wide, and I had a lot of moving parts going on, and I just didn't put it on. But I think it is a short, and I think you can use this 43.50 as a pivot point, and shoot for something. 38 for starters. I think it's definitely going to go there. ARC K couldn't have done better for us. We had that Let me show you here. We had that butterfly, the 64, 59, 54 butterfly that expired on Thursday, and basically we pinned that thing. I was trying to think, had I ever actually pinned either a call or a put fly? I think this is actually the closest that I ever came. 50, 58.99 and 59 would have been the absolute pin. And I think, I'm not sure because I didn't look at it after I closed it late in the afternoon with about 90 minutes to go. If you stayed in that, you might have gotten, wrung an extra couple $100 out of your position when it came back down right to 59. So if you were in that and you got it, congratulations. What I want to do now is I want to put another short on and get back into being short ARK-K. We've got this prior low way down here at 52. I think price finds that level. I'm going to be watching Tesla really close because that's a large component in the ARK complex. And so I will let you know what I get and when I get it. But I think ARK is heading lower. Here's the ARK-W. I am in the May 80 puts. Straight up May 80 puts. Got them probably like back up here beginning of last week or the week before. Anyways, lost this 82.5 level and now it's coming down. I think it's going to come down, fill this gap, and revalidate this low down in the 65 range. I'll be watching that close. It is going to be a May expiration, but I like being short the ARK. I noticed I didn't even have I didn't have that refreshed. Same place, essentially, right here at around 77 is where we're at. And the point I wanted to make on this is that I've been watching ARK really closely for quite a little while. When there's a bad day on the Qs, it's a really bad day for ARK. So, I've seen days where, the Qs are down 1.5%, and right across the board on ARK, they're down 3 and 4%. I think you're getting really rewarded on the downside on these ARK names. And what I also like about it is they're ETFs. You don't have to worry about 50 million earnings, and you don't have to go hunt for all these little holdings that she has aggregated. And because once you get in, down her list, the liquidity in the options dries up. If you go to these little companies that aren't heavily traded by the institutions, you get really wide bid-ask spreads. And really, I think the only reason to do that is if you know something specific about one of the names that is on her list, that you think it's particularly bullish or particularly bearish, and you want to pick out an individual name. I just think that shorting these instruments is such a nice, clean way to accomplish what you're trying to accomplish, and that is, execute the thesis that unprofitable bubble Ponzi names are going to have a really difficult time in a environment of shrinking liquidity and rising rates. And so that's really what the thesis is behind shorting the ARK complex, because by definition, that's kind of what it is. So let's do a quick recap. Make sure you spend some time on the blog site this morning. I put some meat on the bones on the macro regimes that we're in. I also have a 50-year chart on copper that I think you'll find very, very interesting. I've got 4 or 5 trade ideas there for you, all written up with the charts and the levels for you. And then, of course, we've got all the static charts on the indexes where you can write down levels if you need to go back and double check those. So, hope you have a good day of trading. Hope you benefited from the video. And let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.